Hey, what's going on? Dustin Mansell coming to you guys from Las Vegas, Nevada. And in this video, we're going to go over how business owners can get up to $26,000 in tax credits per W-2 employees from 2020 and 2021. Now, a lot of people know about the PPP loans, but nobody really knows about the ERC, which is the Employee Retention Credit. Now, remember, I said credit. This is forgivable. You do not have to pay it back. Now, even if you've got turned down before, they have just in the recent months, they have changed the rules where you can get the credits. Now, there's a bunch of other videos out here that you can take a look at, but it's usually only from one firm. We are the Expedia of the ERC tax credits, and we've vetted over 30 different firms. 30 different firms. We got it down to 4 firms that are legit, real, and they give you the most money back, okay? So with us, down below, if you want to schedule a call with us, there is a keyword that is credit. You're going to text that into that keyword, that toll-free number that's down there below. You can schedule a call with one of our experts. Now, it's all free, no credit cards, no nothing. It's about a 5-minute call. But if you want to have a little bit more information on it, check out this what we're going to show you right now. When it's done, we'll let you know exactly how to get a hold of us. And we hope to help you guys out on your tax credits. We'll see you guys in a minute.
So you said the PPP first round was $500 billion. This has $400 billion in it. And how much of the money has been allocated thus far?
So we get updates every quarter. So at the end of third quarter, 18 billion have been used. So there's 95% still left over. Now, once it's gone, it's gone. So more and more people are starting to see it. I mean, our company's probably, like I was telling you, we're probably the second or third largest in the country, I'd say. We're very systematic and automated, but we've made it a lot easier for the business owner to go on there because, you were asking earlier, the logistics, the logistics goes is if the business owner right now says, hey, I want to go and see if I qualify, they'll go on the website, then they'll go through the questions. It'll take them maybe 5 or 10 minutes per entity. And at that point, they're then going to receive an email and says, this is the range of credit you're approved for, because we still need documents. Now, it's going to tell them which documents we need. There's pretty much 2 to 3 different documents. 941s, those are quarterly reports with IRS. Employee reports showing their employee count, and then their PPP information. What everyone doesn't know is employee retention credit started the exact same time as PPP first round. This isn't new.
Nobody knew about it.
Yeah, but no one knew about it because PPP was so easy to get. You couldn't get both under Trump. When Biden amended this, he says, you know what, I want to make sure I give people money back for keeping employees, for retaining employees. So because of that, I'm going to make it so if you got PPP, now you can get ERC. That's why this has changed, but last year you could only get one or the other, but majority of people got PPP because it was so easy to get.
And so just to clarify, if you do have PPP or you did get it, that does not disqualify you from this, correct?
Does not. Basically, why we have to have it, based on the regulations that they have, is we have to verify which employees you're counting, and that PPP shows that. Someone that has back taxes, they are so happy about this because they were scared because they felt like every night they couldn't sleep or someone was pumping on their chest. It was the IRS knocking at their door, trying to, take money from them any which way. So this actually wipes that out and helps them, move forward at a better, start at day one with nothing behind them.
Yeah. So I didn't get the EID. I got the PPP, but with that, it was very stringent on getting it quote unquote forgiven, how you spent that money. You had to send in documents and utility bills and lease agreements and all that stuff. So when you get this, is somebody going to come back and be like, all right, well, show me where you spent the money at? Or it's completely up to you?
It's completely up to you. It's fully forgivable the day you get it. Now, granted, you have to tell your CPA that you did receive this money, and it's going to be taxed as ordinary income. Yeah. But, it's in other words, it comes in almost like a tax refund check. The IRS still sends out checks, right? They're old school. So it comes in check, and then you definitely have to tell your CPA, hey, I did receive, $300,000 from the employee retention credit, and then they'll put it on your taxes as ordinary income.
Yeah, but I mean, it's newfound money. So I love it. I love it. Cool. So, everybody's on the call. I got employees. What makes somebody able to qualify for something like this?
So I always say, and there's another slide that talks a little bit more about this, but it's almost like a tree. So in 2020, you can get up to $5,000 for that year. Okay. In 2021, it's $7,000 per employee per quarter. So, and you only can get quarters 1, 2, and 3. So 21 plus 5, $26,000. So how do I qualify? Number one, going on the website, and just going through it. Don't pre-qualify yourself without going through the questions. We never ask for a credit card. We never ask for that. And we'll go over, how we charge, and it's something on the back end, nothing even up front. We'll go over that later in this presentation. But of the 5,000, the first one is, number one, you have to have W-2 employees. So that's always the number one question. Number two, do you have 100 employees or less? If the answer is yes, then the next question is were you shut down or amended based on a government mandate? If the answer is yes, then you get $5,000 per employee for 2020. Now, let's say you have 140 employees. Well, then you don't get money for 2020, but the questions in 2021 are, do you have 500 employees or less? Then the next question is have you had a supply chain disruption to your business? If the answer is yes, then you could qualify for each quarter. If the answer is no, then it goes into, have you had a 20% revenue loss comparing your quarter 19 to your 2021? Now, where this has been huge is when you and I talked about this, the supply chain disruption amendment, that did not exist.
Yeah.
That's happened last 60 to 90 days. More so because, the current government, the current presidency saw that, hey, not a lot of people are taking this. How can we make it so more people are going to get this money? Because we've already passed legislation to allot for this money. Okay. So how can we get this out? Hey, well, what's kind of the biggest issue that we're having right now? Well, supply chain. Well, let's make it so if there's a disruption, to their business, let's give them money based on that. Yeah. And that's been huge because a lot of people are having supply chain issues. And, it could be a widget that they're having supply chain. I mean, I even have attorney firms that saying their courtrooms are having troubles, so are getting closed down. That's their supply. So it matters whatever business supply you're in and how it is affected around, is considered the supply chain disruption.
Yeah. So I think the biggest takeaway here, and again, when I'm talking to people, they're like, oh yeah, I already talked about it. I don't qualify for that. Most people think that the only way to qualify for the employee retention credit is to have a loss of a lower income, right? And some people did, some people didn't. But if they didn't, they're like, well, no, that doesn't work for me. What really opened my eyes is where the real opportunity is that that's one of 3 ways how you can qualify, and the other 2 are very apparent for a lot of people in today's world, because we did have shutdowns. There's massive supply chain issues. So like you said earlier, somebody saying like, oh no, that's not for me. Don't chalk it up too soon, because you don't know what you can actually qualify for.
Right. No, it's funny because I'll get the 2 biggest things I get from objections from people when they're like, oh yeah, I don't qualify. Well, that means, their tax professional probably looked at it, but it matters when they looked at it. So someone yesterday says, oh, I got PPP money, so I don't get this ERC. Well, that tells me that the tax professional hasn't looked at it since March, because that's like the oldest amendment, right? So no, you can definitely get that. Then the other one is, hey, I made too much money in 2021. I don't qualify. You're right. I mean, 2 months ago, that's true, but things are changing all the time with this, right? Yeah. And us as a company, we're staying on top of it. And that was the case until the supply chain disruption added as an amendment.
So any loss of income, any shutdown, any supply chain issue, all those are ways that they can qualify for this thing.
Yeah, the supply chain is before the net revenue loss now. Before it was, the supply chain wasn't even on there. It was that you did have to have a 20% net revenue loss.
Got you.
But now you can have a supply chain disruption to your business.
Wow, that's amazing. I love it.
Yeah.
And this is the first thing you told me to do. I was like, what? Like, there's no way. You're like, Google it, man. Like, it literally says irs.gov. It's right there.
I always it's one of those proofs in the pudding. I do two things all the time when I meet with someone, like when you and I were talking, is Google it. Hey, text your tax professional right now. Like, I'm not scared that you're actually texting someone that you trust. Like, I get it, but you got to know that I'm 90% confident that they just don't do it, and if they do, but why didn't they do it for you before, type of thing, So,
sure.
You always have that piece, but I always tell people, I'm not scared. Hey, text your tax professional, text your CPA, Google it right now. After the ads, you'll see that this is a legitimate thing. Go to the irs.gov website.
That's wild. That's wild. So I think this is the other kind of chart you were talking about earlier, and we kind of dove into it, but just high level, run through this one more time.
Yeah. So going from top to bottom. So it talks about 2020, quarter one, quarter two, and quarter three. So quarter four, they took away, that was another part of the amendment about a month and a half ago. So quarter four is out. It used to be up to 33,000, but because they wiped 7,000 out for quarter four, it's just going to be quarters 1, 2, and 3. Small employer talks about 100 employees or less, and then they changed it to 500. So like I said, if you have 140, you won't be able to get money for 2020, only for 2021, because it's above the 100, below the 500. Revenue qualifier, that is after the supply chain. Government organizations, hey, that's one thing too, is nonprofits can get this. Indian tribes, that's what's kind of crazy. The next one says recovery startup business. So that's been kind of interesting, because I have a lot of people says, oh, I started a new business just early this year. It's doing pretty well, but I definitely don't qualify because I didn't go through the pandemic. No, if you start a business after February 15th, 2020, you can get up to $50,000 per quarter for 3 and 4.
Disruption of business, right? So like if you had to work from home, or if you couldn't meet in person at your, team meetings, or like what constitutes like a shutdown, quote unquote.
So, yeah. So in 2020, it's, we pretty much 99% of people were shut down in the month of April. I have plenty of people that says they weren't. Like one friend of mine has a hearing aid company that he's like, actually, we weren't shut down. All right. Did you have to adjust your business based on a government mandate? He's like, well, actually, they told us for 90 days we couldn't do any marketing online. Okay, well, that's your that's your mandate, your government mandate that they told you not to do. So that's how he qualified for that. So and these ones, that's something I probably should say. These are attestments. So someone might say, well, how do I go get proof for that? Or these are you're attesting that this happened to you. Okay.
So it sounds like, again, don't count yourself out until you at least give it a try.
Right. Yep.
Awesome. So $26,000 per employee, and that's if they qualified for every quarter, which some may not.
Yeah. So that 5,777, that's where the 26,000 comes into play. So sometimes that's where I guess say up to, that's the max. And us as a company, we're trying to get that max for you.
And it's not all or nothing. You can qualify for bits and pieces.
Yes. Yeah. People get that all the time.
Cool. So, somebody's, interested, they had, issues within their business, the past couple of years, and they want to apply. What documents do they need?
These are the main 3 documents. Now, I always tell business owners, I say, hey, you know what? Just go through the questions. It'll tell you what exactly you need. Don't go into it saying, I need to make sure I have all these documents before I get started. No, don't do that. Go do the questions. It'll take you 5 or 10 minutes. And then I'll tell you which documents to upload. And it's a secure Dropbox upload. Majority of the documents you're going to have is your 941s. Those are your quarterly reports from the IRS, your payroll summary reports, and then your basic PPP info, whether you did the first wave, second wave, or both.
Nice. Awesome. So, and you kind of touched on this time frame to get the credit back. If you're approved today, you don't get a check in hand today. It's a timeline. Is it a matter of if you get it, or like once you're approved, you're approved?
So that's a good question. So let's talk about our logistics. So let's say someone goes on there right now and says, hey, I'm going to hurry and go do this. Okay. It takes them 5 or 10 minutes. They're going to get an email. The email will say, here's the documents we need you to upload, and here's the link to upload it. Let's say they click it right then. They upload those documents. They're then going to get a replied email and says it takes us 5 to 7 business days to file to get your to see what credit you're approved for. Then in that 5 to 7 time frame, they're going to get an email that says, hey, you're approved for, and it's to the penny, like, 700,000, 32 cents, whatever, 32 cents. Are you ready for us to file? When they hit submit, then we're going to file it within 2 days. Now, the amount that we have on that screen, that is what they're going to get. It's 99.9% accurate. Okay.
Gotcha.
So, but yeah, so that's kind of works. Now, I know that we're going to go through later, but I'll just kind of go through it now because we're on this logistics side. Is, what do we charge? How much do we cost? What's the cost of it? Well, number one is, the cost of not doing it is quite a bit, right? And that's what's been costing people, is they didn't know about it. Well, we saw as a bottleneck, if we charge people up front for this and then they don't get their money for 4 to 6 months, maybe longer, we didn't want to receive those phone calls like, hey, where's the money? Like, what was this legit? Hey, I want my money back. We said, you know what? We're not going to do that. We're going to work our tails off and get them the most credit possible, but we're going to take a percentage, which is 15% of whatever credit they get approved for. So if they're approved for 100,000, then, they're going to get 85,000. We're going to get 15,000. The next question would be, well, how do we get taxed then? Do we tell our tax professional that we get 100 or 85? No, you tell them 85. You're going to pay taxes and ordinary income on that 85,000. Then we get our 15% of our 15,000 in that case. So that's another cool thing about this, is it doesn't cost you anything up front. You can go right through it. And believe me, the competition that, the small little CPA firms that are doing this or whatnot, they're charging up front, and sometimes they're charging a third and 15% up front and 15% on the back, so that's just what we do. And it's worked well because, people are like, hey, I didn't even know about this. And, let's just try and get this done because, for 4 or 6 months, I'll just keep waiting. And then when I get my money, it was money I didn't even know about, and that's what's really cool about this.
I mean, I think the biggest thing for me is like, it's newfound money, right? It's something that, most people didn't even know was possible. And then, it pops up with 20, 50, 100, 500 grand of newfound money, right? Would you want 100% of nothing or, 85% of a lot, and the other biggest thing is there's no money up front. There's not an application fee. There's not, 5% up front. It's paid. You get paid when they get paid, which I think is the awesome part about it.
Yeah. If someone said, do you have a money back guarantee? Well, yeah. I mean, we don't get paid until they get paid. So that's what I love about it, especially when you start out this presentation says, I'm not asked for a credit card. We never ask for a credit card. We don't want to ask for a credit card. So that's what's really cool about all this too.
Everybody wins, right? It doesn't cost anything. Nobody loses any money. It's literally just newfound money for everybody across the board. For anybody who wants to apply, submit their documents and see, what they qualify for. Well,
number one, I want to appreciate everyone taking the time to, during the day, a busy day, to get on and listen to something new, because I watched a couple of your posts or whatever on, hey, I'm just trying to add value. Like, that's exactly what it is it is value, right? It's adding something that, they didn't know about. And so I hope someone learned at least one thing on the whole call.
So if you got questions, drop it in so we can get them answered. There's a couple in here already. Does this work for part-time employees?
It does. Good question. So as long as they're W-2. So there's a calculation we have for full-time, part-time, and seasonal. So the answer is yes.
What if I bought a business back in 2021 and I did not suffer much revenue reduction or shutdown? I would ask maybe if there's a supply chain issue with that.
Yeah, I mean, here's the two-part answer to that. Number one is I sold a hotel early this year, right? So I was able to use it up until I sold it. And then the new owner, because he has 20 employees, is now using it for the second half of the year. So that's that one part to that. The other part is, that's the part that has been changed, is like a lot of people like to think revenue. It's the supply chain. If you had any supply, I don't know what type of business that was, but I can't like place on what your supply chain is, but if there is a supply chain, you're just attesting to it.
Nice. And if I got one other question, if there's any other questions, definitely anybody on here, drop in the questions. And also, if it's something you want to go forward with, again, there's no loss, right? It's not like, hey, you pay $1,000 to see if you qualify. There's no money up front, and it's literally, free newfound money that's potential. So can supply chain issues count as a lack of customers/patience?
Oh yeah, for sure.
So maybe like a dental business or something that, people for whatever, something like that.
So one of the consultants we have for our business, her name's Mary Slauson. She's on our website, and her background is she's an enrolled agent. So if you've ever heard of an EA before, they actually are with the IRS. They take a test specifically with the IRS, and they help people with taxes. But what's very specific with her is she actually worked for the IRS for 25 years as an expert witness, forensic, documents. So she's one of our consultants, and she describes something when you think about supply chain, this is a good way she put it. She goes, when we were kids, we'd go into the dentist's office and we would open up a magazine, and the magazine on the left would show this picture. And let's say it has this picture on the right, it's the same picture, but then it would say, what are the 10 things that are different from the picture on the right than the left? The left is the correct picture. The one on the right, the guy's missing a shoe or whatever it is, and you'd circle it as a little kid, right? She would say, imagine 2019 as the picture on the left, and now 2021, the picture on the right. What are those things that are different from your business in the last 2 years that you've had to adjust? That's most likely going to be kind of defining a supply chain, most likely, because things have changed. What has changed with your business? And so that could be something that you might think of. I was like, oh yeah, well, we've added this because of X, Y, and Z. Maybe not, and if the answer is no, then the next question would be the 20% revenue loss. So, but from what I've seen, 80% of companies are having supply chain disruptions for sure.
I mean, everybody's going through it at some level at this point. Yeah. I mean, it's getting wild. What's like, it's, curiosity question for me. What's like the average that you're seeing people, and I'm sure you're getting like 10 grand and 10 million different, in between on average, like what are people seeing? 50 grand, 100 grand, 500 grand?
So the average company, so we keep track of that quite often, is $350,000 per company.
That is wild. Like,
yeah. And I mean, you and I were talking right before this is, there was a guy that has, multiple food franchises. I can't say the name of the business on here because I don't have permission, but 900 employees, but they're separate entities. So that's one thing I wanted to kind of mention too, is let's say someone has, 700 employees, but, they have 10 entities, 70 each, or maybe it's a Papa John's that has 30 employees, but the guy owns 50 of them. That still qualifies because it's 500 per entity, right? And so, like talking with someone like that, I mean, it's going to be between $15 to $20 million in credit that we're estimating right now. And the whole reason why they didn't do it themselves, because they said we looked at this 2 months ago, is because when they did PPP back in the pandemic, that took them 4 to 6 weeks to get done. And they said, this would take us 3 to 4 months, and we don't have the capacity or the bandwidth to do that.
So there you have it, $500 billion in these credits. It's amazing, amazing, amazing. I mean, this 5-minute phone call could be worth $1 million, depending on how many employees that you had during 2020 and 2021. So down below is a way to get a hold of us. Have one of our experts give you a jingle. If it's something that's not for you, if you don't like the tax credits, no big deal. We are not going to pressure anybody, but we're here to help you guys out. So once again, my name is Dustin Mansell. If you like these videos, hit that subscribe button down below. And I'm hoping to see you guys soon. Talk to you soon.